Let's get across the market open now with Daniel Ortizi, who's joining us from the Stock Doctor. Good morning to you, Daniel. Nice to see you here. So we had a positive finish for the Nasdaq and the S&P 500 overnight. Looks like we'll come under a little bit of pressure at the open here locally, but commodities actually performed quite well overnight with iron ore, copper up, gold up as well. A little bit of safe haven buying there.
Yeah, good to join you this morning, Dean. And yeah, we've seen a bit of fluctuations in commodities recently, haven't we? A bit of back and forth. Certainly a new sentiment came out, or sentiment report from China Steel Mill showing some neutral positivity now from where it was very declined or depressed levels. So we are starting to see some, I guess, positivity from the China steel sector and also some margin recovery, but that's partly due to iron ore prices falling, which obviously is reversed now. So a lot of data coming out, but I think the bigger talking points still remain. What happens, obviously, with the Donald Trump presidency, potential tariffs, how will that affect Chinese demand and their growth targets of 5% GDP? So still a lot of question marks, waiting to see the hard data come in. Yeah, it just hasn't probably been strong enough as of yet. Obviously, the stimulus as well hasn't been strong enough as of yet, but gold, I think, was a buying opportunity in our view. We still have a favorable view of that as a commodity, probably one of the most well-placed commodities at the moment, Nadine, in my view, in addition to something like aluminium as well, which has had a very strong year.
Yeah, look, gold, safe haven flows overnight. I won't make you become a political analyst. Obviously, we've got rising geopolitical tensions with a very wary eye on Ukraine, in particular, in Russia right now. Look, overnight we had some M&A news in the commodity space as well, with Piedmont Lithium and Sayona Mining. They're combining, say it will give them, further growth options, more resilience, obviously, in what's been a tough market for lithium. Is that a positive for you?
Oh, it's certainly a deal out of necessity, Nadine. And one of the things that Piedmont Lithium had was effectively a contract to buy spodumene at North American Lithium, which was the asset owned by Sayona for effectively what was a fixed low price historically. But unfortunately, due to the high cost nature of that operation, at times I had to sell that to Piedmont at a loss. So, look, the nature of the asset is still the same despite the merger. It still is a high cost asset. Piedmont has other assets in its portfolio, which could bring together some larger scale, and these companies need to merge effectively to get more scale and attract potentially more funding, etc. But still at the end of the day, the North America lithium asset is what it is. It's been a high cost producer its life, and it still has some issues with things like recoveries and quality of ore that it produced. So although I think it is a merger of necessity, it's probably not getting me excited at this point in time. It's a very high leverage play. It'd be something to look at in a lithium recovery scenario. But in my view at the moment, yeah, it's probably just not the play. We obviously saw the material production cuts out of a lot of Australian producers during the recent quarterlies. I think Pilbara Minerals is still the highest quality operator you can get exposure to on the ASX, and you just go through the metrics that they've been able to produce, whether it's costs, recoveries, so on and so forth. I think they've got a lot more positivity in that operation than, for example, taking a bit of a punt on the merger tie-up here, in my view.
All right. Daniel, look, I know there's a lot to get through with M&A. Amcor, taking over a U.S. company. Look, you don't have to go into the detail, but did Amcor just become more beautiful than boring?
Well, look, in my view, the last probably 6, 7 months, Amcor's, certainly becoming on a lot of fund managers' radars again because they're starting to comp positive growth. So Amcor unfortunately had, a relatively sizable business exposed to Russia, which obviously was closed once the conflict started. That was a negative impact to earnings, of course, of around 5%. For a business like Amcor, that can be very hard to recoup because it is a slow growth, obviously year on year single digit compounder. Also, you had cost inflation, you had volume declines throughout that period, and we're only now starting to see the business return to growth. So I think M&A is a part of this country's history. It's a part of their lifeblood. And, the last time they executed very significant M&A was the Bemis acquisition, which they're kind of still, they're still kind of reporting those benefits today, certainly the merger synergies that were announced. So, look, I think it's probably going to be more analysis required, but these types of, I would guess, accretive M&A or horizontal M&A, not necessarily acquiring new business lines, but getting bigger and acquiring complementary assets, I think is positive. And we've actually seen one in Australia in Ansell, which I thought was one of the biggest no-brainer deals of the year, and the market's reacted very positively to that. The market wants to support sensible acquisitions where synergies can be clearly extracted and certainly financially benefit the company over the long term. We don't want to see these kind of out-of-pocket, very large, high-risk M&As, what we saw with Aura and Saverglass,
Right.
which the market still is digesting today.
Okay, well, Amcor will come online early. We'll see how the market reacts to that. Now, we do have earnings due from Web Travel Group. Bit of a checkered recent history, but what is your favorite stock in the travel space, Daniel?
Yeah, and we sometimes use a bit of a term, and we certainly use this about the mining space, but you just got to back the companies and the management teams, which is avoiding stepping on the Legos. So a lot of the times you can see businesses kind of take themselves out of the investment space for one reason or another. And, the one which has certainly stood out has been Flight Centre. Although they obviously have been resulting in net downgrades due to the weak market, and certainly their trading update at the AGM was below consensus, but I think that was priced into the market. And we actually saw a positive reaction post that update, given how strong the October trading was. Whereas we look at its peers, at least listed in Australia, of corporate travel, and like you said, Web Travel Group after the demerger, it's just been issue after issue, particularly with corporate travel group, which I think has lost a lot of trust with investors. Not only did they miss expectations due to a weak market, but the last 3 years, really, they've just continued to, guide too high and then have to downgrade. And they had certain periods of really strong profit growth out of Europe. Some of that was due to humanitarian travel and work, obviously with the conflict going on, but obviously that's been cycled off, and the market was somewhat surprised by that. So Flight Centre has been the one which has actually managed their expectations quite well, grown obviously through acquisition in leisure and travel also. And the only business at the moment which is actually over-indexed to corporate. So their corporate business is now larger than what it was pre-COVID, when somewhere like corporate travel management is only around 80% recovered because they've been losing business as well. So I think it's one that's over-indexed and certainly been a relative outperformer. But that trading update for October, I think, was very, very positive, and perhaps signaling a bit of a turnaround for that company at the moment.
All right, really interesting stuff. And just are you finding value in this market, generally speaking, though, Daniel, and where?
It's very difficult, isn't it, Nadine?
Yeah.
I mean, when you've got something like Technology One hitting $30 per share off a solid report, but I guess report that we kind of expected to see from Technology One in terms of the growth rates, it's just very difficult to find the next opportunity. The quality stocks which are reporting growth have been well favoured by the market, and especially in the larger cap space, there's been a lot of flow for that area in particular. Smaller caps which have disappointed have been the complete opposite end. They've just been absolutely smashed. And one that a lot of people are starting to talk about now is Megaport, which obviously was a bit of a market darling recently at $18, $19 per share, been smashed by more than 50%. Even though it is, I would say, a market leader in its field, an early adopter, and historically has grown revenue, between 20 and 40%. Once you start to get those concerns for growth, we're seeing how vicious the market can be and how favourable it is to the larger end of town. So you can find opportunities here, but obviously, anytime a stock price is heading the other way, there's going to be a reason for it. The market doesn't just offer opportunities for free. There's always going to be an attached risk or a perceived risk in the stock. And the risk for Megaport at the moment has been obviously still relatively new management coming in. They've had to reinvest in the business for growth. So during 2022, the business was all about raising prices, cutting costs. That's affected, number one, net revenue retention, where perhaps prices are too high for some of its virtual connections. They've now had to drop that and offer discounting, and they've also had to reinvest in staff and sales. So that period of perhaps a bit of a misaligned expectations of what the market thought the margins and the growth was going to be versus what it is at the moment, that's caused the sell down. That could be the opportunity. But the risk here, Nadine, is always, can they return to growth? If they can, I think the stock is actually heavily undervalued given the margin that it potentially can produce over time. But we'll just have to wait and see whether that growth materializes.